Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to join you on a Monday night to chat markets for the last time in 2025. That's right, public service announcement. Live Market Analysis will be on break for Christmas, New Year, and the next one will be in February. So whatever the first Monday in February is, and that's because that's going to do the last Monday in January, but I think the last Monday is Australia Day, so it's whatever the one is after that. Can't remember off the top of my head. Before we get into today's discussion, we should mention that everything we're going to talk about is general in nature and has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully and seek the help of a financial professional to help determine its appropriateness for you. Of course, it's very important to also remember that trading and investing is risky. Hey, you are going to lose money at some stage. Everything you do, you're responsible for, not me. Today's agenda is pretty simple. You ask questions about the stocks, bonds, commodities, cryptos, indices that you're interested in. Anything I can get a chart on, and I'll give you my best technical analysis reader. But if you could, please, can you make sure that I have the ticker or the market that you're interested in? All caps, please, because sometimes I's look like L's. The type of setup, is it a continuation setup, a turnaround setup, aggressive setup, or it could be a combination of those. We often get them. Are we adding risk? Are we maintaining risk? Maybe you've already got it and you're just asking, look, should I maintain the risk I have, or are we reducing risk? And what are the key levels that you're watching? Let's head over to our AMI broker window where we have our portfolio management model, which is a little bit tricky at the moment. We went back to 2/3 on the Nasdaq composite last week. I said on the basis if we did get a close above, look, I said if we get a close above the high of that candle, and it was for all intents and purposes good enough, you know. And now, of course, you know, Murphy's Law. I should have waited for what I said, but you know, it was a pretty steady rise. And given the time of the year, given the propensity of the Nasdaq to rally at this time, actually, there was one other key factor which led me to move on that day, and that is the fact that, you know, the Nasdaq Composite is one of two key benchmark indices that we use to help understand what our risk in the US should be. And it was that same day that the Russell 2000 actually closed at a record high. So it's more broader than the Nasdaq. You could argue, you know, a more risk-on, higher beta version of the Nasdaq. Without going, I felt, well, there was enough evidence to move that way. Of course, no trend follower knows what's going to happen next, and we've had a little bit of a pullback since then. Not that it's that severe at this stage, and I don't think there's any reason not to be at the current risk level, but I think we all agree that we're not FRP at this stage. It's just, the environment just doesn't warrant it. We've still got some cash at the ready. And you know, if you were to delay that previous 1/2 RP moving to 1/3, that's probably not a bad idea at this stage until we get a higher trough. That's really all we want now, is just a test and hold of that short-term uptrend ribbon, just to let us know that it is behaving as dynamic demand, and that could happen. It could very easily happen at this time of the year. Let us head over to the ASX, where it's a similar sort of theme, isn't it? We have been at the minimum risk setting, 1/3 RP, or the maximum risk aversion setting, for quite some time, and moved on that day. Oh, did I? Oh, yeah, I can see that it looks like that's 1 day in advance. How does that work? No, that definitely says 15. You can't see it says 15. So that's weird. Why that's over there and not a bit further back? What if I do that? What does that do? Oh, I see what's happening. Maybe I need to send. It's just the order. Something needs to be brought to the front. Let's try that. Let's go. There we go. Just needs to be brought to the front. But then now it's covering my candle, which I don't like either, actually. What if I do? No? Anyway, I'll fix it later. Bottom line is, we were 1/3, and on Friday I said, well, if it looks like a duck and it quacks, it could be a Santa Claus rally. And we know what Santa Claus rallies can do. We can cover the distance between 8,700 and 9,000 pretty quickly. And therefore I said moving back to a half risk. Now, clearly, that is still an extremely risk-averse place to be. because your typical fund manager is still about 90% invested, even if they're a discretionary fund manager. And if they're a passive fund manager, well, they're always, by default, 100% invested. Cash is always rolling in and goes straight in. So I think at our whole of 1/2 RP, that is still ultimately a very conservative risk setting, and I'm comfortable to be there. Where would that change? I don't want to see it close beneath 85.62. Something would really be wrong if we saw that at this time of the year. But the path of least resistance, and I keep saying this, at this time of the year is generally up. So let's assume that more often than not that is going to be the case. Today's candle's not ideal, but we didn't give back the whole hog, did we, from Friday? About 2/3 of it. Let's do the whip around the ground and see if we can get any more clarity compared to what we've just discussed. And that clearly is an issue, the lack of clarity. Friday's candle there completely engulfing the prior bullish candle. But, it's a common theme, not a lot of volume. I think that's the message here. So we can expect at this time of the year, yes, prices tend to be good, but that's because without a lot of stock in the way, it's easy for fund managers who want to manipulate the market to get prices up. And typically they're incentivized to do so because, especially in the US, it's their end of year. So yes, it's the end of the calendar year, but it's also the end of their fiscal year, and bonuses are begging. Let's have a look at the European markets now. They're pretty flat, and that's, I think, consistent with everything else we've said. The DAX is maybe recovering a little bit. Euro stocks towards the top of the range. So that would, be more consistent with the very gradual increasing of risk. The FTSE 100 is very flat. Spain looking amazing. Again, we say it every week. Hang Seng very much in an equilibrium phase. We've noted that a little bit. Nikkei just coming off the boil a little. Nifty 50 also. And in Shanghai, I think we've got some problems here. Equilibrium at best, but maybe starting to roll a little bit, at least in the short term at worst. We've obviously talked about that one. Just having a look at some of the sectors, any of these major thematics that we've been tracking changing, and that is, high PEs, your average PE of the consumer discretionary sectors, it's high 20s. It is a high PE sector, and we have seen that suffer, as we're going to see in a second. Bond yields have rocketed. Energy is typically considered one of those lower PE sectors because, you're pumping stuff out of the ground, you're getting your earnings now compared to, say, high PE, we're getting your earnings down the track. So short duration. Financials tends to be a bit of a bond proxy, doesn't like yields going up, but big move actually on Friday. That was the key. I mean, that, if you want to understand how that move on Friday eventuated, it was because they tweaked the big banks, didn't they? They don't have to tweak a lot of stocks. They only had to, this is the old tin pot, so you only have to tweak the banks. And in a thin market, the banks are generally thin anyway. You can get a lot of bang for your buck by buying ultimately what are quote unquote safer stocks anyway. So, not such a crazy thing to do. Bit of a pullback on gold today, but that's the nature of the beast. Healthcare still looks pretty terrible, actually. Another high PE sector as well, in information technology, is the highest of the high PE sectors. I don't know what it is, but it'll be 60 or 70 or something obscene like that. I'm happy to stand corrected, but typically that's where it tends to operate. Resources, big move today, disappointing move today. And yeah, that's not a great candle, so we will need to monitor that one fairly carefully, I would say. Real estate, more of a bond proxy, so it has struggles. Staples, neither here nor there. Let's skip over that one. Telecommunications, definitely more of a higher PE sector because you've got your REAs and your car sales and Seeks of the world in their utilities bond proxy. So, the rates have taken, there have been several casualties. Let's have a look at the London Metals Exchange now, and pretty steady on aluminium during the week, but stronger on copper. Iron ore has disappeared because I did the update, which means that the little percentage sign gets put back in where it's not supposed to go. No, I take the percentage sign out. A bit of a pullback in iron ore during the week. Nickel, perennial pullback there. Lead actually coming off. Tin, however, looks like an absolute monster, and zinc is roughly the same. Maybe a bit of a monster developing here in lithium carbonate futures. Strong close today. If we head over to the candlestick chart, a decent candle actually, and pushing well into the upward pointing shadow on Friday. They're really powerful signals where you see that supply side candle, upward pointing shadow, and the next candle pushes straight into that zone where there was supposed to be really motivated supply. significant volume, on Friday, Thursday, the move up. So that could have been a blow-off there. It could have been a blow-off, but they took out that supply. It's pretty strong for me. And some of the other ones actually starting to look half decent again as well. We might even see, for the first time in about 3 years, some long-term uptrends. My long-term uptrend ribbon turned green. How about that? It's been since very late 2022, very, very early 2023. And here we are heading into 2026. That's spodumene, Australian spodumene there. Also looking like a really solid turnaround play. And, of course, it does have the telltale long-term uptrend. I've just started charting this one, actually. I won't tell you where I scraped the data today, but I did scrape the data. Thank goodness for ChatGPT. It could do amazing things. And I'm very, very naughty. Scraped all the data back to 2008. I know, and because I know where I can keep it updated as well. So that's pretty neat. So we'll keep an eye on this one as well. Neodymium, Praseodynium in DPR. For some reason, written the other way around, where I get the daily updates. But that's a half decent chart. I mean, it is trying to turn the long-term trend. You can see it's almost about to switch. Short-term uptrend behaving as a dynamic zone of demand now, and looks like a pretty classic sort of turnaround setup with a trough set, well, a few troughs, but this main one set above the long-term trend ribbon. So worth keeping an eye on that, I think, as we go through 2026. Let us head over to the, not you, let's go back here while I sort that out, because once again, I have not set up the appropriate, no, we're going to go there anyway, because I have to go there to change it, and we're going to go here and go properties, yeah, maybe, and then select the right one, which is supposed to be there. Okay. And we, cancel. We're on Bitcoin because that's the default, but we're not going to stay on Bitcoin. I want to head over to the silver chart, which looks very strong. I know Friday's candle, not ideal, but coming back pretty well today. That is in the nature of the beast, and there's really nothing so sinister in there that would push me off my view that this is still a very, very strong short and long-term uptrend, and therefore happy to at least equal R, but even plus R if required. All looks pretty handy to me. I mean, there was a bit of a threat there, isn't it? So actually, look, I should say there's a bit of a threat there in the price action and the volume, and if we had volatility, it'd be up a little bit. Today's candle's coming back well, but I have been a little bit remiss there by putting too much weight on today's candle because it is not closed yet. So let's say if we close there, that's a good sign. If it turns into an upward pointing shadow, actually with that volume and that price action from Friday, we may well then have something to be concerned about, but only a little bit concerned given everything else that's going on screen. With these last week, we said they were starting to look better, stronger, and that's continuing to be the theme here on both platinum and palladium, but I would say platinum looks better. And gold, I could argue, looks the best right now, doesn't it? Starting to curl back up and looking like it will challenge at 44.35 for another new all-time high. Happy to go equals R on those other three. Let's have a look at high-grade copper in the US. It's trying to break out, looks pretty decent, not unlike the London Metals Exchange version, and iron ore has been volatile up towards the top of that range, but no surprises on that either. 105 is a big level. It would be pretty impressive to see it get through that this year, next year, on the basis that still demand in China is not that strong, to be fair. Have a look at the uranium price. It is trying to turn up. Not that it helped uranium stocks today. They got absolutely belted. And much like silver, it's a tough gig because you can look at the underlying commodity price all you like, and you'll be very, very confused when you look back at the share prices. Let's have a quick look at some other commodities in the energy complex. Nothing doing there on the two natural gas contracts, but actually a big pullback there in the US natural gas version. Crude oil and Brent crude tracking lower, but ultimately range bound, and thermal coal coming up, and coke and coal not looking all that exciting or interesting either, are they? Okay, let's head over to the bond market. In fact, before we do that, we may well look at Bitcoin not a lot doing there. I'm pretty happy with like an equals R at best, potentially actually maybe even setting up for the next minus R, depending on if it rolls here or not. And it's that short-term trend ribbon starting to look like it's doing its job there, isn't it? So keep an eye on that one. And Ethereum, neither here nor there. Okay, as promised, let's head over to the bond market, finish our whip around the grounds by checking out the price of money in Australia, and a little bit of a pullback there. And what has it been today? Is that, that there's your rally in stocks as well, isn't it? It just allowed them, gave them an excuse to buy a few banking stocks and jack up the index. Looking at the 10s, pretty similar, but these are still very, very strong short-term trends. In Japan, still very strong there, and that would be also a little bit of a tailwind for us. Not huge, but just persistent. And US government bonds are doing nothing, and that's good. That's okay, and that's why we've seen their stock market able to do a little bit better. Interesting to see those 10s push up. That's not good. We don't want to see that push up too much, but largely it's still within the realms of fairly benign and uninteresting, which is what we love in the bond market as stock traders. Okay, let's head over to your requests, and we'll start off with the offline requests. I've got a few here from Mick. I'm just tuning in for your online requests. Hello Adonis, hello Robert, hello Sonia. I'll get to you in a second. First we've got Mick's request for, and I'm pausing because I want to head back to my candles, EOS, which had a big day today actually, and I think looks pretty good. So a nice turnaround continuation setup. Can I call it that? Continuation, because ultimately the long-term trend technically still up. Turnaround, because obviously it's turning around and bouncing off the long-term trend, which is characteristic of this type of setup. Strong push today, massive volatility, massive volume. Something interesting is going on. That's what those two indicators are telling us. It makes it objective, not subjective. Okay, is it above, is it below average? How much? So something interesting is going on. And the last time we saw something interesting going on was up there, and it happened to be the top. If we have the price action signal coinciding with something interesting going on in volume and volatility, we need to sit up and take note. In that case, it was the end of an uptrend. In this case, it could well be the end of a downtrend, and at the same time, the beginning of a new uptrend. And I think it's worth a punt to find out. And that's where I'm at. Pretty simple stuff. Big candle, gap, downward pointing shadow I think is critical, because it did actually pull back a little bit into the range, a bit of profit taking because the market had changed its mind. The market was working off a different mindset prior to this, which is pulling back. Every day is black, every day is black, every day is black. People giving up, being fed up by this. There's no reason to buy, right? And on the pop, it's a chance. It's a chance to get a better price than what you had. It's a chance to get out. And guess what happened? The demand was there. It met them, and it kept buying. And it's a substantial amount of buying. Yes, there was a substantial amount of supply, but we know there was a substantial amount of supply in the system. And we need to deal with that supply. And the way we deal with them is through volume, by trading with them. And the candle type tells you the motivation and who won the day, ultimately, which was the demand side. Back above the short-term trend ribbon, bouncing off the long-term trend ribbon. It's all pretty decent. Where could we see a little bit of supply potentially creeping in? And we'll only know when we get there. It'll manifest itself in black candles, upward pointing shadows. Not far away there. Is that so close that I wouldn't take the trade? No, I think the signal is good enough, and I think we're close enough to say, well, I think there'll only be a modest amount of supply there if we see any at all. This is the main game. This is the key level where there's a huge amount of demand, previous demand, that's stuck in, just hoping they can get $10 again, $10 itself. So I think that's the ultimate target here, and happy to plus R and see if we can get there, see how close we can get there before the supply eventually kicks in. If you happen to have it, obviously it's an equal R at this stage. So pretty happy with that one, Mick. Let's head over to, if you're wondering, it did actually make one of the feature charts today as well. But it's I like it when a few of them sort of running at the same time. And you might have seen me put ELS in very recently, and I want to say I put it in. I think I put it on that day, but also put it on that day, and that day as well. So under $2 to 280s, a decent move, and it's good to see when they start to move again together. let's go to DUR, which actually I did see today. Definitely noticed that one. I didn't put it in though, and I just felt, and it's a good segue from the last one, really just a total lack of interest. It went up, don't get me wrong. There was more, of the interest that was there was excess demand, and it does speak to the possibility that there's just no supply. The demand was there, it was motivated, it paid more, and it just didn't find any supply along the way, and that's how it was able to get the price up. But we know there might be supply lurking in the system. This is where the nature of the setup comes in, and there has been supply. So ideally we could trade with them. There's even a little level there, isn't it? Ideally we can trade with them, and the volume would have told me more. So this is probably more me just wanting another day, just another day's confirmation. But I don't mind it. It certainly meets for me otherwise. From that one little box that didn't get ticked, all the other boxes for the turnaround continuation, I think, are being ticked here pretty well. And therefore, if you're that way inclined, and now I'm kind of talking myself to going into putting it into the list for tomorrow, to be honest, I'm happy to go as such on that one. Mick, let's go to TER, which I think we might have mentioned it a little while ago. And what did we say? We said something like plus R on the next demand side candle, because we weren't so certain. We also said that in the past this might well have been a plus R event here. Well, that's completely come undone here. And we can see right on screen, you cannot deny that this is more evidence that these are riskier trades. These are risky trades. And this one was an aggressive trade. It wasn't even a turnaround setup. It's clearly not a turnaround setup yet, because we don't have evidence that the long-term trend ribbon was yet behaving as a zone of dynamic demand. No high trough in that ribbon, preferably in the top half. All we had literally was a close in the top half, which then changed reward to risk from the aggressive setup and allowed an entry here. And it kind of played out the way that these can often play out. For those looking for a turnaround setup, it was never there. And these are me just stating facts, but it is instructive for us as a group, not as a cautionary tale at all. I don't want it to be a cautionary tale. I just want it to be something that is consistent with what we expect. That's all. It's not a cautionary tale. If you see the setup next time and it's an aggressive setup, you see that big white candle, it's still a plus R. But my only point is you go into these things eyes wide open. If you did plus R on that day, obviously there's no chance of plussing R after that, because we never got the demand side candle that we talked about, and that day is the minus R. There's do not pass go, do not collect $200. I know it's bounced since then, and if you wanted to wait for a better price, that's your choice, not the way I would do things. And maybe you got it on that day, and then even today's taking a better price than you would have got if you got out straight away. So me, personally, it's a 0R proposition now. So equals R on that day, minus R on that day. It's just how trading works sometimes. So let's put that in. Minus R, and I would go so far as in brackets after that one, just on the severity, obviously, of the candle. You can see the range and above average volume, not that much volume, but certainly still above average. That's where I'm at on that one. Let's go to iron ore stocks in general. Why do they look quite good when the iron ore price hasn't really done a lot? Well, the iron ore price doesn't have to do much. It's above $100 US an ounce. And that means that, I actually don't know the dynamics of Champion. I don't know their cost dynamics, but I do know very well the cost dynamics of BHP, Rio Tinto, and Fortescue, and they're all producing around about US $20 a tonne or less. And so they're just printing money. They're money factories, and the factor is coming from most of the big funds predicting a price less than 100, and the longer it stays above 100, they have to change their outlooks, spreadsheets, sells in spreadsheets, which once those sales are changed, the valuation, the allowable valuation for Fortescue goes from, it might have been $18 to $22 or $26 or whatever it is. And this information is coming back for their own funds that they manage, and to clients through research that we'll never see. and therefore it is creating an excess of demand, and the short sellers don't want to be there either. You've got fewer short sellers because there's less reason to be shorting, and that's why they're doing better. But this substantial volatility. It's so hard to trade these trends sometimes, isn't it? Because look at that move today on BHP. Gap, run, black candle, low close. It's so at odds with the run that came before it. To just give up so easily is really quite frustrating. Rio Tinto, they're so, but that's still a nasty little candle pairing there, but not enough to turn the trend, and therefore for a trend follower like me, you just kind of have to give it the benefit of the doubt. And I know that frustrates people, but just get the hell out, Carl, I'm done. Well, you'll never get the big trends if you're going to get out so easily. I don't know if that actually answers your question, Mick. Look, to be honest, why? Any thoughts on why iron ore stocks seem to be doing much better than commodity price, more demand than supply? Let's go to he's got a few here. I'll whiz through them. KCN continuation, but is today's candle enough for minus R? Yes, because we're at $5. So you would have done it anyway. So I guess if you haven't done it, then you've got an extra reason to do it. So I'm going to go yes for me, minus R. NMG, obviously looking very good. Where would I be looking to reduce risk? I don't know, because I haven't seen any bad candles yet. So where would I be looking to reduce risk? The answer is until I see the signal that tells me there's enough supply to worry me to say we're moving towards equilibrium or supply side's in control. The type of signal. Big black candle, long upward pointing shadow, volume climax, volatility spike, that sort of stuff. At this point in time, I can't see it. It looks pretty healthy to me. We can do stuff like going back and looking at previous points of supply. There's nothing on that weekly chart that I need to worry about. So this is as good as blue sky for me, which brings in round numbers. Look, 5 maybe, but it's got to be a pretty weak round number. 10 cents certainly. That's like getting to $1, isn't it? There's some areas that you could look at to see if you're getting the price action confirmation that the rest of the market is thinking that those areas are important and they're taking profits there. But in the meantime, it all looks pretty solid. I'd be an equal R. I could go plus R today as well, because I know it didn't close on the high, but just based on pedigree, it's looking pretty solid. So happy to do that as well. And ACDC, not the band who's touring at the moment, but the global ex-battery tech and lithium ETF. We've had plenty of signals on this. It's been one of the most featured charts in ChartWatch since I got back from my holiday, and I put it on that day there. That's why there are arrows there. I still think it's okay. This last candle's not ideal. Blend those two together, it looks a bit more severe. This is confirmation of that. It's reaching back into the gap, finding more supply. Yeah, look, it's a decent little signal there, isn't it? It's a decent little signal for a minus R. Yeah, I could definitely go minus R here. It's not a big minus R, third, no more than that. If you want to do less, you do less. Yeah, and equals R on the rest, obviously. That's not in question. Everything else is exemplary here. But that's a decent little pullback there. We can see it's decent because look at the volatility. And the candle itself is not big, but it's the candles move relative to the previous candle that we need to consider, and that's where that optimized true range comes into its own. So yeah, something's going on there above average volume. It's a little signal to minus a little bit of risk. Happy with that. Let's go to DXB. That's my opinion. It's my interpretation of the model. The model is subjective at times, less subjective at other times. I still think this one's decent. I think, this was the candle here. That is the signal for plus R. And there's actually, little nice little segue from the last one. We saw two candles when we blend them together are actually really quite sinister. This one is, there's nothing to blend those two candles together. We're still inside the range of that one and not even closing beneath the balance point of this strong candle here, the midpoint. So on balance, you'd say demand's still in control, even after those two very mediocre candles. We're still fine. So yeah, that would put me in equals R on this one, because everything else kind of checks out, doesn't it? That. Hey, is this the strongest continuation we've seen? No, it's more of a continuation turnaround. It's decent enough in that regard. That's it. Mix done. Actually, I don't think this is Mick. I'm apportioning those to Mick, but I think that might have been Alan. In fact, it is Alan. There you go. I just didn't put Alan's name in. So, Mick, I hope you're happy with your EOS, DUR, and TER, and iron ore review. And Alan, hope you're happy with your KCN, NMG, ACDC, and DXB. And now we're going to head over to you wonderful, patient people on this side. Offline's on that side, online's on this side. I am well, thank you, Adonis. We'll do your USA stocks as always at the end. Robert's got MI6 for plus 1/3. Thank you for sticking to the convention here, Robert, of telling me what you're interested in and whether you're looking to add risk or reduce risk. Probably also wanted to know what you think about it. It is a continuation setup with a short-term uptrend, long-term uptrend, and it's bouncing nicely off the short-term trend ribbon. I definitely put this in my shortlist today, so it made the regular list. I don't think I elevated it to feature, just on the basis that that's a decent whack of supply that's come in on that day, emphasised here and supported here. So just with the question mark of how strong, well, we don't need a Q, we'll just do that, how strong and motivated supply still is the question for me. And it was just enough of a question to, out of a score of 10, bring this one down from a otherwise 8.5 or 9. Everything else looks pretty solid to me. I mean, this is all one move here. So the second from last peak is all the way down here. So it's still good price action. I mean, it's still a strong run up compared to the pullback. Like I said, bring it down from an 8.5 or 9, maybe bringing it down to, a 7.5 or 8. And that's all. And that was enough to keep it out of the feature list. Right. The feature list is not an accident. It's me using the stuff in my subconscious to say, well, that one is a more often than not than the other more often than not case. But otherwise, let me confirm for you that, yes, it was a plus R in my opinion, equals R if you've got it. Next one for Robert is GA8. What is GA8? Oh, okay. So I haven't. If I have to say what is it, you can bet your bottom dollar that this turnover filter is going to be 0, because I haven't seen it in my scans. If I haven't seen the scans, it doesn't exist to me. Doesn't mean it's not good. It just means the turnover's not quite there. And you can see why. You can see Sketchorama. But the good news is it's actually starting to show some really decent price action again. Candles that make sense. Long motive phases, periods of excess demand, followed by actually pretty shallow pullbacks, where the profit taking, because don't forget, a lot of people clearly stuck in this one for a long time. That profit, not even profit taking, it's just getting out, the dead wood, clearing with the dead wood, trading with the dead wood, only shallow pullbacks because the demand is soaking them up. Supply's coming out and the demand is more than happy to take that. And then we get a nice move again, a shallow pullback. There are a few little black candles there, but not inconsistent with the little bit of sketchiness that remains. This is all very good here. We can see night and day between when in fact, if you go back here, it's really clear. Nobody's interested. Starting to get interested. I can't draw arrows down here. I can only draw lines for some reason. Oh, maybe I can. Let's try that. Nobody's interested. There we go. Starting to get interesting. You can see the interest is coming before the trend move, the trend change. Now we're really interested. Now it's on. All right. These are classic turnaround setup volume characteristics. And indeed, also in the volatility, it starts to become a little bit normal. We start to get more upside volatility. I'm pretty happy with that one. I don't think there's anything really sinister going on with those last few black candles there. Even as they are black, they're kind of trending higher as well. So I would personally go plus R. If I was looking to add risk, I had an allocation within my bucket that's ready to go, or equals R if I've got it, and I'm just wanting to maintain my risk. Thank you for that one, Robert. And his final one is AQI, which again at Alicanto Minerals. Not ringing a bell. Go over here. You can see why. Minimum turnover filter 0. Similar to the last one. Maybe not as clear, but similar in that pure sketchorama. The volume comes in and we start to get some decent price action. And with this one, we're starting to get some really good trends as well. And today's candle is a cracker, of course. Could have closed a little bit higher, but I still think very, very decent. Let me zoom out and see if there's anything sinister going on in the background there. A bit of a level through here, isn't there? Bit of a level. We start at that trough, go up to that peak, right, and draw that across. Still a bit of a ways away. Look, there's a minor one there. I'm not too fussed about that because I think we're really close to it, and one there, we're really close to that as well. So I don't think that's a deal breaker. Just keep in mind, sort of around about 8.5, we might start to see some supply manifest itself in the market, which is still a decent whack away. I think you'll make 1-to-1. Yeah, look, you might even get a small little bit of a nothing candle just consolidating in there. And if it comes with a nice high close, I think that's when you have a go at it. Maybe just with that upper shadow, just requiring another confirmation candle, I think would be ideal. Certainly equals are, no question about that. And let's just go next demand side candle for plus R, just to be safe here. But it's very, very close to being straight up plus R. Thank you for those three, Robert. Heading over to Sonia, who's got BGL, which I think is looking pretty strong as well. That made feature, I think, tonight. Let's have a look. Yes, it did. Made feature tonight. So happy with that one. A little bit of a supply zone. Obviously, there's the setup, and then there's the reward to risk. If you're already on it, Sonia, that's fine. You've got in at a level where this area up here is not impeding your reward to risk. If you're getting in now, however, then it may be something you just want to keep an eye on, because we could get it. It could pause there. It might go straight through. But if history's anything to go by, and our own observations, we know in our gut that when we get up to these supply zones, they can hang around there for at least a while, whilst the demand chews through the supply, the latent supplies that's in the system. Okay, zone of supply equals latent supply, looking, waiting patiently to get out. So let's respect that, I think. But on a pure setup, it's very strong. I mean, if we just zoom into there, you'd say plus R every day of the week. So I keep clicking shift on that one. Yes, certainly continuation setup, Sonia, I agree. Okay, let's go to Sue. I am well, thank you, Sue. Can I please get your thoughts on BGA? Yes, you guys are amazing today, because you're picking up on all the ones I had for tomorrow. But that's good. That means I'm doing my job of teaching you how to use the model. And yes, for me, it definitely went in. There you go. I put it in as a feature as well. Because it has had a long consolidation, it was a really strong candle, obviously today. But now I'm thinking, maybe it's not a feature, because there wasn't a huge push here, but perhaps we've also dealt with the supply. I mean, this is what we're doing. It's clear as day. Here's the supply zone, and we're dealing with the supply. So maybe we've dealt with it, supply zone. And that's what this is all about. We had a bit of a pullback, but the pullback, we held strong. You know, the demand's come in. And today's, I think, is an emphatic move, certainly the candle. But now that I'm looking at it, maybe lacking a little bit of conviction. So that's, confirmation tomorrow, I think, would be instructive as well. If this kind of, what's the right phrase, if it goes to plan, or if it can just even give me one more, it doesn't have to go up a lot, but just one more candle here, I think it really does suggest that the supply in here is done. Like We don't need to break out, we know that. We just need to show evidence that we've dealt with it. I think that would be the case. So yes, for me, no doubt, plus R. I'm now questioning a little bit, is it a feature, is it just a regular? Either way, it's still plus R. And the only reason is just maybe we would have liked a little bit more evidence that this supply up here, was you kind of think there's going to be supply there, that it's been cleared, but we may well have already dealt with it. You know, we kind of push into here, none of that's, and then, yeah, so there's a few above average ones in that supply. A few there, so look, maybe we've dealt with it already, but it's a yes for me anyway. Let's go to MEK, which was also on the list today. Not in that list you can see, but it was on the regular list. MEK. And yeah, could have gone either way. I think we're splitting hairs when we're talking about good, you know, what is a good chart? What makes a good chart better than another good chart? It's very solid, and that's why it's in the broader list, plus R. And now I'm thinking maybe I should have featured this one as well. I mean, you can go either way. I think your first instinct is the best. And the only reason why I didn't feature was just, this was a pretty solid push from here. And let's just, even now I'm saying, do I really need to wait for, what am I waiting for? No, I'm not waiting. It's plus R. Why did I not feature this? What? Again, lack of conviction maybe. Splitting hairs. I can't even say. I want to say that here's the peak. I'm not trying to find excuses, but I'm trying to convey what my subconscious clearly went a regular list, and then on the second pass, my subconscious clearly didn't go feature, and that's what I'm trying to get to the heart of. And maybe it was just, let me get rid of some of this stuff. Right, we've got too much stuff there. It's stuff I've taught you, but if we look at where the last trough is in relation to the second from last peak, a little bit of encroachment, a few black candles suggest that this supply is a little bit serious, and these are only very fine details, not quite getting the volume expansion here into the supply zone, a bit like the last one, but I'm contradicting myself because, what was it, the BGL I put in without the volume, but then I, second pass looking at it now, realise that. But it would be unfair potentially for me to put BGL as a feature and not put this one, if you get where I'm going. So without a doubt, it is certainly a plus R. It is certainly a strong setup. Let's not talk about what we don't know. Let's talk about the stuff we do know, and that is unequivocal. I think the rest is splitting hairs. We're talking about 9.5 out of 10 versus 9 out of 10. Very, very rarely do I see 10 out of 10s unless we're looking at some of those US stocks, maybe that Perry's given us. Let's go to, you've got one there, SRL, which is still looking very solid. This one made the regular list, but it didn't make the feature list. And this one is easier to see why it hasn't made the feature. This is a scary candle. I put to you that there was, and this is some of the themes that held me back on some of the other ones. You know, I put to you that this is a substantial candle. Okay, something important happened there. And with that price action, there was a decent whack of supply, and it's motivated. And in the vicinity and in the shadow and in the company of that one and in the company of that one, it just suggests a little bit more caution. Perhaps getting a candle that's a little bit closer, or even just another white candle here to confirm. And then it gets elevated, or it gets elevated. But no, look, it's still strong. Everything else is still there. I can see why you would do this. This is without question. The equals are part of it. It's just whether we're adding risk and whether this is maybe up there with some of the other ones. That's all. And we did say minus R on that candle as a precautionary measure. And maybe even on that candle, not maybe, I think on that candle as a precautionary measure, or certainly on that one. So you've got a couple of minus R's here in the system. Are we adding that risk to it? Well, there you go. I mean, I think you can add back some risk today, but I'm not sure it deserved feature just on the basis of some trepidation around that peak. I'm getting a few tricky ones today. I know we're not tricky in terms of are they add risk, equals risk, or minus risk, but tricky in terms of ranking them among your final few setups that you might end up with. Let's go to DYL. This one is tricky again in that it, for me, was looking like a pretty stock standard turnaround continuation through here. Like, I think pretty sure I put it in on that day. I reckon I put it on that day there, or maybe that day and that day. I didn't put it in on that day, it was the upper shadow, put it on that day, and then boom, uranium stocks across the board got belted and down it comes. I'd give this another day. I would wait for confirmation of that move because it is somewhat at odds with what was happening prior. And it is going to be in the basket, unfortunately, deep yellow, regardless of what's happening in its own right. And this was hands down one of the better looking uranium charts out there, probably globally. When the sector gets tagged, it's going to get tagged. So I think let's get another day, perhaps where there's less of that sector theme going on and just what was happening prior to that, DYL's own demand supply dynamics, and see what we get. Another candle like that, though, would cause me to take a little bit off the table, maybe split the difference, go 50-50 on this one. But a nice little white candle, a little lower shadow, and I could stick with what I have. So equals are just for today, but obviously super concerned about that price action because we have gaps. We have gaps from here to here. That is a pretty serious black candle, and it's only the fact that we're still above here and everything else was turning. And this was such a strong signal prior that I'm just giving it the benefit of the doubt at this stage. Okay, we're still only just encroaching on that last second from last peak as well, but it's line ball. Let's go to Sonia. No worries, acknowledging your other comment there. Peter Scott, we're going to the TSE, so we'll actually hold that over. Perry's got some US stocks for us, and Michael's got GG8, so we're not far away from heading back up the list for the last time this year. That's a ripper. Let's head over to Store 2 watch list, where we'll see if it's underneath my head. No, you can see there GG8 was definitely on the feature list today. For me, one of the strongest setups out there because of that most powerful demand side candle, just elevated in its importance for me by the fact that it's got that downward pointing shadow. So there was some doubt expressed in the market over that stronger open, and it came all the way back down into the previous day's range, and then all it found was a wall of demand. And we have removed a substantial amount of supply from the system, ladies and gentlemen. There's no other way to interpret that huge volume bar. And that is the supply, ultimately, that is throughout this range here, but also lurking in and around this area here. So it is reassuring when we see that sort of a supply response in an area that we would naturally associate with there being supply, and the candle has told us that the supply has been consumed and there's plenty of demand to boot. I'm not too worried about this zone because of the strength of that close. A nice base pattern also, and pretty textbook on everything else. So this one was definitely featured for me, and hopefully it clears up some of the question marks I put over the previous ones. And again, reiterating, we're only just line balling, spitballing the line ball nature of feature or regular list, but this one I think is more of a feature for me. Plus R or equals R if you've got it. Just happy to stick with the risk that you have. Because we don't have any other ASX requests, we will head back up the list. But let me just show you some of the other ones which I did decide were features. I think that one's pretty straightforward, isn't it? Back up to that old point of supply. It's been in a few times. I want to say I put it back in. In fact, I know I put it back in on this day, didn't I? Put it back in on that day. I think I ran it as feature on that day, and I think I ran it as feature on that day as well. So I like to think I've got back in that pretty early. I think the only earlier you could have gone was there. And that's a decent. We're trying to get that mix of setups in, A1G, just invincible, isn't it? We've talked about Bega, we've talked about BGL. And it's good to go through this list and see that, I did then maybe put a few question marks over some of these, and you can see why also with their points of supply. We talked about the strength of that one, and very interesting as well in terms of the proximity to it and its points of supply. I know I discounted this one, so a bit further away. Big move, strong candle, move back into the zone, and the powerful volume signal that maybe we lacked a little bit here, and certainly there. Okay, so as long as some things are making sense, I know I might seem like I'm wavering a little, but hopefully my explanations are making sense, or at least justifying why I'm either sure about something or I'm less sure about it. Very strong there. FML looks the goods there, doesn't it? Strong volume signal there also. GG8 we've talked about. Gold, well, I think that's pretty self-explanatory. LYL, I think that's also pretty self-explanatory as well, and a decent little volume push as well. MFF, we're starting to see some confirmation here in volume with the points of supply and the price action that are more consistent. MND, so we're looking here, we're looking here, we're looking here, and hopefully these things are making a bit more sense. Above average, but decent still. And this one I did think a little bit long and hard about it, actually. That was the one I maybe was least certain. It just feels like a bit of a thin market and a few orders having a large impact. But on the basis of these two pretty solid white candles, I felt that I couldn't not feature it. It was definitely always going to be regular list, and then Whitehaven as well. A few above average days here, double white candle, and yeah, strong before this. I think it can pick up again. Okay, let's head back up the list and do your US stocks. Head over to our trading view screen, and we're going to start off with moving to our preferred layout, which is that one there. There we go. Salesforce, what did we say last time? Equals R, maybe plus R if we got a decent candle. Hasn't happened yet, but still looks decent for a turnaround setup. Don't know who asked about that one. Oh, sorry, I've got Raju's asked for a couple of Aussie stocks in there, which we've done one, which is A1G, which is fantastic. But let's go back quickly and do your other one there, Raju, which is TCG, which I'm pretty sure we can do quickly because it's looking very strong. In fact, it's impeccable. Definitely made the general list today. It had a little bit of an upward shadow. I could have easily put it in the feature list. In fact, there's still very strong conviction in that volume. And now I'm thinking maybe I should have put it on the feature list, but it's featured so many times recently. Give something else a go. But without a doubt, plus R, and you'll see it in the list tomorrow on that basis. Okay, let's go back to here and kick off with Haraju and Johnson & Johnson. If I get into the right window, it might work. J&J. Big US blue chip stock. I mean, can we say as blue chip as they come? Compare this to some of our blue chips. And it's a monster, isn't it? It is an absolute monster. And this is why we'll never be able to compete with the USA in a million years. I mean, what have we got that's even close to Johnson & Johnson? Let's go plus R equals R if you've already got it. And these things are not even in question, are they? Impeccable. 10 out of 10. We talked about that before, right? We don't need to split hairs on something like that. VSCO. Oh, Victoria's Secret. Okay. Let's go to weekly chart. Certainly the right time of the year, isn't it, for a stock like this with Black Fridays and Cyber Mondays and Christmas coming up. Looks fine there. A little bit of supply potentially around about 65 and maybe pushing into 75. Keep that in mind. I don't think it's going to prevent you from doing anything here. Still a long way away. The gap, the run, the hold, it's all really consistent with almost impervious to demand side control and appetite. So yes, for me, I can't fault it. Happy to back this trend. Ultimately, that's all we're discussing. Are we happy to back the trend? And the answer is yes. Thank you for those, Haraju. Rupump's just put one in. Decker's Outdoor Corporation. A bit more of a downtrend. Are we looking for a short, perhaps, or a turnaround play? Well, I can answer this one very quickly. It can't be a turnaround play because the long-term trend ribbon is still red. Okay, and it needs to go at least amber, and we can see why. I mean, even then it went amber and it just went straight back down again. So let's respect the long-term trend ribbon. Let's, really rejoice and be thankful that we have it and the amazing job it does every day on most stocks, more often than not, of keeping us safe and out of trends that aren't ready yet. And if it ain't orange, it ain't a turnaround setup. It could therefore be an aggressive setup because it does have a short-term uptrend. It does have great price action. It does have good candles. It does have sort of a bit of a volume interaction around the low. But we are also still being impeded by that long-term trend ribbon and therefore can't make reward to risk work on it. So it's definitely not a turnaround, and whilst it has the hallmarks of an aggressive setup, we won't be able to make the reward to risk work just yet. If it closes halfway up the trend ribbon, then we could talk about that. Okay, let's go up the list. Perry's got AUGO. Welcome back, Perry. Good to have you back on board. Oh, what a monster. How good is that? Let's go back to the weekly chart. This looks even better. So we were talking about 10 out of 10s, weren't we? And I have no idea where this stock's going next. Neither does Perry. But we don't need to know what's going to happen next. We just need to know what's happening now, which is there is nothing but a wall of demand and very limited supply. And I'm not sure what I did there. I was somehow zoomed, everything just zoomed in. And I could not replicate that even if I wanted to. Maybe there we go. Oh, there you go. Wasn't that hard. Plus R equals R on Aura Minerals. Guessing it's a gold stock, isn't it? HG, I'm guessing, is, it's copper futures. Is that the one you meant? Probably not. Let's go for Hamilton Insurance Group. That's probably the one you meant. And that makes more sense. Let's check out the weekly chart. Having a look back in the corner of our eye, there's nothing there. It's fairly recent, at least on TradingView. So very good here. Look, a few black candles in the system lurking around. You can see the bit of a zebra, and that would be the only thing that would just bring this down in comparison to some of the other ones that are just brighter and whiter. I mean, there's got to be an indicator. Just call it like contrast, isn't it? That we can build, get ChatGPT to build for us, and just work out the contrast. You know the contrast on your TV? That's homework. Somebody go build that indicator with ChatGPT. Just got to be some sort of algorithm there. Just give us a contrast out of 100, because I think that's what contrast is, isn't it? It's like 0 would be black or 0 would be white, and vice versa when you go the other way. So how many pixels on the screen are black and white? Just we talk about within the candles. Wouldn't that be interesting? Maybe I'll do that over the break. I'm sure some smarty pants listening tonight is already thinking about how they can do it. But maybe the contrast on this is not as bright as some of the others, but still very strong. And I know I'm being very picky here, but I think that's what you want me to do, is help you compare and contrast. There's that word again, isn't it? Your final few setups. You've narrowed it down to a bunch of ultimately very close to 10 out of 10s, and how do you choose between them is what we're talking about there. Let's go to CX, which is COMEX. I think we've talked about this one fairly recently. There you go, plus R equals R on that day. Don't have to do much else. And a very boring looking chart ultimately, isn't it? And they're the best ones in my experience. So pretty happy with that one. I think the contrast arguably a bit better here. Yes, there's a few black ones in there, but I think there's far more white pixels in the candles in comparison. And that's it. That's the final one. They're all continuation plus R, says Perry, and I agree with him. Let's go to Peter's customary exploration of the Toronto Stock Exchange each Monday. And absolutely, why not? I mean, who cares where these stocks exist as long as we can trade them? Let's go to the weekly chart because I just want to see what's out the corner of my eye there. And there isn't anything, and that's reassuring. So I felt with the choppiness of some of this, and if we check the contrast on this, I have to make this indicator now, I think we would say that it's a bit darker than some of the other ones. Not to say, I mean, that's history, right? And we could be moving to a completely new paradigm for this one. But in my experience, and perhaps in yours, the leopard doesn't change its spots. Maybe in this case, the zebra doesn't change its stripes. And these are just small things at the margin. And that's, again, I know I keep saying that, it's probably the theme for tonight. These small things at the margins that just help us. Because this is a strong setup. Don't get me wrong. This is up there. This is going to be 9.5 out of 10. And I'm not being flippant with that. It's so strong. But how do we contrast? If we've got 9.5s out of 10 on a particular day, and that's possible if you're trading Australia plus the USA plus Toronto. Not if you're just trading Australia, but if you're bringing in those other markets, then it's possible. Let's go to ITO, which is on the CVE, which I'm getting schooled, is probably one of those 150 Canadian exchanges that I was told we have last week. It must be this one here, I guess, Integra Resources. I know you've got .CVE and I've got TSXV, so let's go for that one. Yes, Peter's saying that's the one. Oh wow. Yep, that's pretty good. Oh, man, that's even better there. I love that turnaround setup on the weekly chart. Look at the candles. This is impeccable. This is 10 out of 10 here as well. I think the contrast is pretty good on this one, don't you think? I know there's a little bit there, but if we go from this move, it's almost all white. So this is, look, even if we don't find this indicator, I think we've got a new term, don't we, on Monday nights, contrast. Let's go equals R. Well, predominantly demand-side candles is something we also say, so very happy with that one. Let's go to Peter's final one, which is PGLD, which I feel we have done recently. Let me get rid of that, so I don't want to type it there. I want to... PGLD, P2 Gold here, that rings a bell. Yeah, we did it last week. And we made a good call last week, didn't we? By saying plus R equals R, because it looked pretty damn good. And it looks just as good this week. In fact, it looks better because there's even more demand side candles. So, yeah, let's go. Look at that. For whatever reason, I put 2 labels on there last week, so let me fix that. And there you go. Click save. That's why I like to save these labels on chart when we come back. Have a good Christmas, says Peter. You have a good Christmas too, Peter. Thank you for all of your support and your contributions in the sessions and bringing some of these great Toronto-based stocks. And that goes for everybody who contributes every week. No contribution is insignificant or small. Everything, I think, adds value. So I really do appreciate everybody turning up on a Monday. Let's go to Adonis, who customarily, isn't it? Adonis is our last batch of stocks, but he's first in, which means he's last out. MNST, Monster Beverage Corporation, looks good. Pulling back, obviously, short-term uptrend driven. So it's more of a pullback play. Decent candle on Friday. Nothing really interesting or sinister, for that matter, going on in the volume. I think that's all pretty tame. I just question the consistency of this move. I want to see more than one candle because we've got 1, 2, 3, 4, 5 out of the last 8 candles are black and decent-ish blacks. Let's just say a couple. Give me 2 white candles. So a candle like this and another one that looks just like it, and then I could go plus R on that one. Until then, just equals R for me. Oh, you're still up. Well, there you go. That's even better. So I think you can have the opportunity to add some risk on that next demand side candle. Next demand side candle. Yep, I hope so. Which also, by that nature. Therefore, if it doesn't respect it, we also know what to do, don't we? Down here, so that's handy too. So yep, equals R for me, and plus R if we get the next demand side candle on that one. Let's go to BAC, which is Bank of America. There we go. Oh, perfect. You're on this one as well, I'm guessing, Adonis? Wonderful. Perfect. Perfect trend. Equals R. And I'm feeling a bit better about some of this US exposure now after having seen this, and a little bit more confident about maybe even the Aussie market sort of getting dragged up, kicking and screaming. Because this all looks pretty solid here, doesn't it? I know we're only looking at a biased cross section. These are the ones that you are looking at, and you're all trend followers now. I'm guessing you're on this one, which is still a hold. There's nothing. I mean, I know they're not ideal, these last two, Thursday, Friday, are they? But they're so small. And, you know, if you speak in terms of contrast, I still think pretty good, particularly from here anyway. So I'd still be equals R on that one. But, you know, just monitoring, seeing that last candle there. There's a little point of demand there, 60.72. Then you've got the short-term trend ribbon. But until we get down there, I think we're still very much a hold and see, and LLI, which is Eli Lilly. I don't mind it. Again, you know my concerns about if the market is so sure about that move, and don't get me wrong, they were so sure about this move, but geez, they were sure about that one. So all I require here is the dink. That's what I want to see. So let me see. I know we're having a move up, and I don't know whether it could just keep going. We may not get a dink, but a little bit more confirmation. But any time you've had that sort of a move down, if you can get any dink, which is a shallow dink, and it's overcome, for me it says that supply is not in the system anymore. The demand side has taken over again. So given that we've seen so many strong setups, it puts me in the camp of, well, I don't want to, I don't want to go out on a limb or play a hunch here that is turning around in trend. And I get why you're looking at it. It makes a lot of sense in terms of that and that. But we just saw half a dozen other setups where we don't have those concerns of this concerted supply side push. Yeah. Yep. Let's go to the weekly chart and see. Okay, so this is making me feel a bit more comfortable with it. So you know, 1100, 1000, come back, test, hold 1000 as the round number. It respects this old major point of supply, and that all really would make a lot of sense. But again, it's still contingent on that dink to tell us that the 1000 no longer is an impediment, but it's actually a support area of support. All right, let's go to Tesla, because I haven't seen that chart for a little while, so I'm quite curious to see what it's looking like now. I guess it's turning up with everything else. So yeah, we're looking like a pretty standard sort of December, January here, based upon what we're seeing. That looks very good. You know, I mean, it's totally consistent with my model to come up, push into a zone of supply, find that supply, come back, vibrate to the short-term uptrend ribbon, and then go again. And that's what we're seeing. And that's on the weekly chart, obviously. On the daily chart, it looks a bit more subdued. So I think I need to see a bit more action, but it's not far away. Look, this is a zone here. If we the rectangle is the best one to draw here. So if we go from this, and what's great about TradingView is it does snap. You can make it snap to the point, and then you can snap another point. Obviously, we won't leave that one green. We'll change it to red, but that didn't work, did it? Why didn't that work? Because I did the text red, not the box. There we go. Okay. I mean, once you put that candle on, I think it makes all the sense in the world out. So we just need to see a strong close in that pink zone. Look, I mean, if the middle of that zone is sort of 475 near the high of the candle, I wouldn't need to wait any longer. The lower, the more it is beneath 475, it's just a little bit more uncertainty because you're still wanting more of that to occur, more of that supply removal to occur. But, it's white candle, high close, then yes, adding risk for me on that one. But again, are there stronger setups with fewer impediments? That's the question. And I would put to you there are stronger setups with fewer impediments in that one, but in and of itself, no objections. AMGN. Well, it's an aggressive short, yeah. Look, and I would have no qualms about doing it. This is really powerful. Not a huge volume follow through though, like not a lot of demand getting taken out. Just this motivated supply with a demand vacuum. But we would have to see, I think, a move. Look, I mean, just into there, and then any sort of black candle. So it's just this gradual move up a shadow into that zone, and then the next black candle here. Because what it'll allow you to do, and this is an aggressive short, because you'll be able to set your stop, or at least we know where our managed risk. This is not going to let me do it now because it is snapping. So let's try and snap it somewhere else, and then I've lost my drawing tool. Let's snap it somewhere else, and then we can move it. So I go escape. So if we get what we want, you'll be able to have your manage your risk on your short up here, and if your entry is down here-ish on the relevant black candle, we're trying to make one-to-one reward to risk into here, all right? Because it's an aggressive, yep. And even that's a bit tight, but depending on what candles we get. Look, I'd love to talk other short setups because we'd like to get some balance, so definitely bring them up. But that is the last one we have. Let me check down the bottom of the list. And we don't have any new requests, but plenty of well wishes. So we may well head back over here and do the well wishing. Sue saying, thanks, Carl, for another great session. Have a lovely Christmas. You too, Sue. Perry saying, great work this year. Thank you, Perry. Great work to you as well. Michael saying, thanks for a great session. Thank you, Michael. Roscoe saying, thanks for everything you do for us, Carl, and everybody else here who's sharing. It's not just me, as you point out, Ross. Everybody has a good go here, and you have done really well all year. Lots of thank yous, Peter, Adonis, Jackie, Michael again, Neil, Sonia. I appreciate everything and all of your support throughout the course of 2025. I'm looking forward to doing it again in 2026. As I said, we'll take a bit of a break. I think a deserved break for all of us, and particularly me, because I feel like I'm always on the go more now than ever with all of this work that I'm doing. But I am enjoying speaking with new people. Market Index has given me that opportunity through those Wednesday webinars to just engage not dozens like we're doing here, but hundreds and borderline thousands of new people that are now getting this message that you've had for many of you several years. So I think you know me well enough to know that is kind of my mission in life, and that's hopefully the mark I get to leave on the world. If it's thousands of people following the trend, then I'd be very, very happy with that indeed. On that cheery note, everybody, thank you for joining me this evening. I won't read the disclaimer, but I'll quickly show it just for the people in the recording so that they can go back and press pause and read it over and over again, because we do need to obviously make these things known. Otherwise, ladies and gentlemen, it's been a pleasure chatting with you this evening. All the best for your trading and investing till we see you again, and please have a safe, happy and wonderful Christmas and New Year's. Bye-bye for now.